Jerome Powell and the Fed are about to change everything. I'm giving this to you straight. I'm going to explain why right here today. I've taken the notes. I need to bring you some extremely important information. We've got to look at this in depth. If you are willing to stick with me through this video, I'm going to give you exactly what you need to make the right decisions here in 2024. Let's begin. No time to waste. Powell keeps talking about normalization and rebalancing, but you can't go back to 2019. Whenever we have a big shock in the economy, like in 2008, 2020, the economy has changed. They cannot do what they did before without causing havoc. Already we are dealing with the effects of inflation. They are looking at it during this time saying, okay, well, what can we do? They're not going to bring interest rates higher. They don't want to actually have a strong economy, as we know. And so what we can expect here on out is more of the same, a weaker currency as a result of all of this in relation to real goods. But I'm going to go much deeper than that. Let's look at what has happened, not just with the Federal Reserve, but with all of the central banks. They printed a heck of a lot of money, and now they're doing quantitative tightening. They're starting to unwind a little bit of that. But what do we know for certain? It is that they are not going back to what they used to call normalization. They never got there, but at least they would talk about it. Now that subject doesn't come up. Yes, their balance sheets are not at the peak that they were before, but even the discussion about going back to having, a small balance sheet or nothing on the balance sheet as it once was is no longer a topic of discussion. What can we expect with that? It's that they want to consume all of the assets. You have to understand this. If this was a foreign entity and they were buying all this stuff up, printing up money, buying it up, you would have concerns. You would say, well, I don't really like this and I don't agree with it and I want it to stop. But in this case here, they do it and they say, well, the Fed, that's our team, whatever. But they're not. This is a foreign establishment in a sense. They don't work for the population. You are forced to use their currency as legal tender in the United States. And broadly, we expand throughout the world. Everything is priced in US dollar, Federal Reserve notes. And so we are all at the mercy of what they do. Now, of course, all central banks generally act in sync with each other. This is a problem. And I'm about to go one level deep. Fed's Powell, not far from confidence needed to cut rates. So I have these few things right down here, and we'll talk about them further as I'll show you the actual quotes. I'll show you the charts. But what do we know? What has actually been discussed? I'm not talking about some analyst far out there that makes a claim. I'm talking about people closest to the matter. Okay, first thing, interest rates are likely to be cut. We're hearing this from Jerome Powell. We're hearing this from other voting members of the FOMC. What else? Inflation would remain sticky, has remained sticky at this time, and would be allowed. So what does that mean? So, they're not going to need inflation to go down to 2%. That is something that they could say, well, you know what? This part here, we're going to let it be a sliding scale. They've already discussed this. Hang in there, I'll show you, okay? And basically saying that they're going to allow more QE, quantitative easing, money printing, but through the back door. They love the back door, all right? And we'll talk about this in a second, but we got to understand what comes next, okay? What is next? Like, okay, buddy, what does this all mean? We will discuss that at the end if you have the patience. This is Nick Timiraos. I brought this up when it first came out. Nick Timiraos is what they call the Fed whisperer. He works for the Wall Street Journal. They give him information and then he basically releases it through the Wall Street Journal or Twitter. And then we can see how the market reacts to it. That's what they love to do. And so what does he say here? Well, quoting, as you can see, that they will allow above 2% inflation target. Okay, they will allow that. And the number that they quote in here is 2.8%. Okay. That's where they're expecting it to be and basically saying that's okay. So understand this. Understand why this changes everything, because no longer are they going for that 2% target. They are basically just saying, you know what, the job is done. And that means without inflation actually being squashed, they are going to allow more devaluation of your currency. My goodness, it's already been such a problem. And they are going to pour gasoline on the inflationary inferno. You got to realize this. Documented facts here. But I'm not done. Let's continue. Hit that thumbs up, by the way, on the way, as we move through this video. You got to hit it now before you forget. Powell noted there had been big declines in core inflation figures, but said that the Fed would want to see more progress. Of course, same kind of thing, but stating this. Yes, we love the fact that inflation's gone down. Yes, yes, yes. All right. And then the Fed policy rate was at the peak for this tightening cycle, saying that's it. They're not increasing. Unless something big changes, they are not going to increase. That is Jerome Powell. I'm not talking, like I said, it's not just some CNBC article. This is Jerome Powell saying this, and other members of the FOMC, voting members, saying that this is it. So what can we expect? We can expect more cuts rather than like the expectation here. We don't know what's going to happen. But the expectation is that we'll get more cuts before anything else. So keep that in mind. All right. Now you look at this, you could see it. Fed seen sticking with 3 cuts despite higher inflation. That's what you got to understand here. They are willing to make those cuts even though inflation is not down at that 2%. You got to realize that. That's what this video is about. They are changing their tune. That yes, our target's 2%, but we don't have to get there right away. We're going to be a little bit relaxed about that. And that's coming out information right now. Their official target is 2%. It's documented on their website, federalreserve.gov. But and Powell has said that is our goal, 2% target. However, they are willing to let it slide before they begin cutting rates because they don't want to do too much in terms of slowing down the economy. Growth and inflation projections may edge higher. Economists expect tapering of the balance sheet to start mid-year. So we're going to see at the June or July timeframe whether they do so. At the time of the recording of this video, we are just before the Federal Reserve comes out with their meeting. Perhaps by the time you watch this video, the meeting has already come out, and maybe we'll get a little bit more insight as to what's going on. Obviously, stay tuned to the channel, and I'll bring you everything. The Federal Reserve is basically what I obsess over. I've been doing this channel since 2011, and nobody has covered it in depth like this because that's really my focus. QT has made significant but not substantial progress in reversing QE. You see, QE is sort of in a way different than QT as QE and QT. So we got quantitative tightening. That's when they shrink their balance sheet. Quantitative easing when they expand their balance sheet. It works slightly different, but for all intents and purposes, one increases liquidity, one takes it away. And of course, where there is more liquidity, you generally have risk assets that increase. Risk assets, what is that considered to be? Well, you have things like your cryptocurrencies, it's stocks, and of course we can go into the risky stuff, all right? But here's where it gets funny. Shout outs to the Finance Friday crew. We can talk more about this, but on Friday, but I want you to see this, okay? Because I don't want you to wait until then. What QT? Reserves have been rising. So we haven't covered this, at least for the past 2 weeks, but reserves have been climbing. And look at that. I want you to see what's going on here. They have been steadily climbing throughout this period. And that tells us, what does that mean? Well, when we got these reserves here, this happens to correlate very, very accurately with the stock market. The stock market's been rising, and so has the reserves. It depends on the timeline you look at, and it goes to be, hey, it's not so accurate and all this stuff. Well, you got to kind of look at the different timelines. Okay, it's very important. What I'm seeing here is that reserves are in fact increasing, and that generally is very bullish. for stocks. Now, stocks have been going crazy as of late, so we'll see what happens. But in general, this is supportive of the bullish aspect of the markets. This is just talking about, you could see Jerome Powell again, the chair of the Fed, said it was likely to make broad and material changes to proposals to rewrite bank capital rules, talking about Basel III and so on. What is so interesting about all of this, all of the fraud, all of the craziness that has happened over the years, the Federal Reserve says, oh, we're going to be tough, we're going to be strong. Just like with inflation, it's not true. You can't believe these people. They tell you time and time again that they're going to fix things, they're going to make inflation. No, don't believe any of them. So what is my message to you? What do I have here is basically that you can expect further devaluation of your currency. That's what I've told you today in this video, how the Federal Reserve will change everything. And as a result, if they're going to continue to devalue your currency, what can you do? Well, if you buy something today, instead of buying it 6 months from now, instead of buying it a year from now, you're basically getting it on sale. That's one simple way to do it. You've got to take action. There's two things, okay? There's the pillars of prosperity. It's something that I've talked about over and over again. Pillars of prosperity, there's two aspects. One is increase your income, and one is preparedness or self-sufficiency. You can do both. You can do more of one than the other, whatever you want to do, but these two things are so important. So you've got to get a hold of all of that. You can increase your income substantially in order to basically be able to provide for yourself and your family. At the same time, preparedness will lower your expenses. That's just the way it goes. That's the world that we live in today, and I hope that that was helpful. I have a playlist. I mention it all the time, but I always see the comments, where's the solutions, buddy? Well, in addition to that, you can go to the How to and Solutions playlist. I have an entire playlist about solutions, hours and hours and hours of content. In addition, for those who don't read books and stuff, I've got 2 books, but you know the way the world works. You can also go to my website, Compass. You can see themoneygps.com. Click on Compass. Totally free education right there for you. No email, no paywall, no nothing. Themoneygps.com. Hit that thumbs up button to support the channel. I hope to see you tomorrow on here where we'll talk about the Federal Reserve and what's going on. I'll see you then. Take care.